I love taking a look at sentiment data when we get to extreme levels because it can be a very good contrarian indicator. Now, sentiment data all alone by itself is not enough. We need to couple this with charts. And in today's video, we're going to take a look at some sentiment data, and then we're going to take a look at some major divergences that are playing out in some of the worst areas of the market. It's certainly worth paying attention to. Now, what we have up on the screen is the small trader call premium minus put premium. When we get it below zero lines, that means more money is being bet on the market collapsing than going higher. It's a very rare occurrence for small traders to ever get to that spot. And in fact, it's only happened 3 times before right now in the last 20 years. And if you'll notice, it corresponds with some major market bottoms. The reason is that old adage, when too many people are on one side of the boat can tip over. And when too many retail traders are betting for the market to collapse after it's already been down as much as it has, like we saw in 2002, that marked a bottom. In 2008, 2009, the market was off over 50%. Small traders starts to bet on the market collapsing when we're already down 50%. In the depths of the pandemic, right? Market down 30, 35%. Small traders betting the market's going to keep crashing. And here we are today at the lowest reading that we've had in the last 20 years. Market's already off substantially so far this year, and retail traders are betting for a market collapse. That could be a very good contrarian indicator that maybe the worst is behind us. Now, again, this alone is not enough, but when we start coupling it with some other charts and take a look at some divergences, there might be some signs that we could be looking towards a reversal. Let's take a look at divergence. Now, divergence means the market doing one thing and something else doing the opposite. So the S&P 500 has been making lower lows, and it made a lower low once again, a few days ago, right? When we take a look at the worst performing area of the market, which is growth and innovation, which is down from its highs in February of last year, off almost 80%, look at what happened. It did not make a lower low. It actually put in a slightly higher low. So the S&P is going like this, and this is going like this. This is a divergence, and it's also happening on major, and we talked about this, long-term support, right? Here's the 2019 taper tantrum low. Here's the 2020 coronavirus crash. And here we are right back at that same zone. It's a very big long-term key level, and we're seeing positive divergence taking place. Now, there's still a ton of damage on this chart, right? We have not put in any higher highs. The downtrend is not broken at this point in time. There are a lot of levels that we need to recapture if the bulls are really going to, take advantage or have control, so to speak. But this is a positive sign that we've got in place. Now, another area of the market that's been absolutely murdered here is Chinese internet stocks, right? In fact, it's been so bad that the ETF KWEB here has put in all-time lows for the ETF, right? And this has only been around for about 9 years or so. And so you can see right here, right, 2013, we're way below those levels. So a complete and total flush washout. And look at what's happened. The low was put in March, and it has been making higher lows from that point in time, right? So we have that divergence that's taking place, and it's sitting at a major $35 price level here, and we're certainly paying very close attention. When we look at individual names in that space, here's Baba. Baba put in higher lows. We come and take a look at Tencent. Tencent has put in higher lows, and it basically found support right there at that 2020 bottom. JD has put in higher lows and is looking at that major $70 price level. This has been that major zone of support and resistance over the last 3 or 4 years. It's right back up into that zone. Emerging markets as a whole have been extremely weak. They topped out right around the time that growth did, February of last year, right? Well, look at what we've got. We've got a higher low that's being put in play after that prolonged major downtrend. And if we draw a key price level on this chart going back to 2000, and you can see the breakout there in 2016-17, support there in 2018-19, right? We're holding above that major level while putting in a potential higher low while the market was making lower lows at that point in time. Last but not least, we'll take a look in at Small cap biotech companies, XBI ETF here, right? Where's this level? Look at this. It's that major level from 2019, 2020, holding those lows. And look what we did here. We put in a higher low, and they're actually taking out and making a potential higher high over that June spot. Now, the real key level on this chart is going to be right around 80, because that's that major price action level. But these are constructive patterns that we're seeing, right? We saw the overall market continue to push lower, and we saw the areas that led us into that downtrend and have been beat up for over a year at this point start putting in potential higher lows. Now, again, like I said, there's still tons of damage on these charts, right? There are, if you just take a look at the biotech spot, you've got this level here, then you've got this level and this level and this level and this level. There is a ton of damage that and price overhead that the bulls are going to have to work through, right? This is not going to be an easy, move higher. There's going to be a lot of battleground levels. But it is the first sign that we're really seeing of constructive behavior under the surface, and it's taking place in the weakest area of the market over the last year and a half, while at the same point in time, retail traders are making the largest bearish bets on the market that they have in the last 20 years. The outcome here in this space, in that growth space, in the Chinese internet space, in the emerging markets, in the small cap biotech space, is going to be very important here, and we're going to continue to pay very close attention. But for the first time in a long time, we have some signs of life underneath the surface. How that ultimately plays out, we'll have to see. I hope you guys have yourselves a fantastic week. As always, if you have any questions, feel free to reach out to me. I'm Tedeschi at perspectivewealthplanning.com or 814-580-9881. Hope you guys have yourselves a great week, and I'll see you all next week. Take care.